Hey there. Thanks for being here. Today we're going to break down how banks actually make money. In simple, everyday terms, banks are a big part of our lives. But for many people, what they do behind the scenes feels confusing or even mysterious. By the end of this, you'll have a clear mental picture of how it all works. Let's start with the core idea. At their simplest, banks make money by borrowing and lending. When you put money into a bank account, like a checking or savings account, the bank doesn't just store that money in a vault with your name on it. Instead, the bank uses most of that money to lend to other people and businesses. You are essentially lending your money to the bank. In return, the bank may pay you a small amount of interest, especially in savings accounts. Then the bank takes that same money and lends it out at a higher interest rate. The difference between what the bank pays you and what it charges borrowers is one of the main ways banks make money. Here's a clear analogy. Think of the bank as a bike rental shop. You give the shop your bike to use while you're not riding it. The shop rents it out to others for more than it pays you. That difference is the shop's profit. Now let's walk through a simple example. You deposit money into a savings account. The bank pays you a small amount of interest. The bank then lends that money to someone else as a loan, maybe a car loan or a business loan, and charges interest on it. Over time, the bank earns more interest than it pays out. This system works because not everyone needs their money at the same time. Banks keep some cash available for withdrawals, but most deposits are sitting still on any given day. This is why confidence in banks matters. As long as people trust that they can get their money when they need it, the system works smoothly. Banks also make money from fees. These include things like account maintenance fees, overdraft fees, late payment fees, and transaction fees. While each fee might seem small, across millions of customers they add up quickly. Another important source of income is services. Banks provide things like payment processing, wealth management, foreign currency exchange, and business services. Companies often pay banks to handle large amounts of money securely and efficiently. Let's look at a few everyday examples. First example, when someone takes out a mortgage, the bank earns interest on that loan over many years. That interest is a major source of income. Second example, when a business accepts card payments, the bank or card network takes a small cut from each transaction. Third example, when someone accidentally spends more than what's in their account, the bank may charge an overdraft fee. Now let's talk about risk. Not all loans are repaid. Some borrowers default, meaning they don't pay back the full amount. Banks price this risk into their interest rates. Safer borrowers usually get lower rates. Riskier borrowers pay higher rates. Banks also follow rules that require them to keep a certain amount of money in reserve to reduce the chance of failure. Let's clear up some common misconceptions. Misconception number 1. Banks make money by taking your deposits. They don't take your money. They use it, while still owing it to you. Misconception number 2. Banks create money out of nothing with no limits. While banks do create loans, they are regulated and limited by rules and capital requirements. Misconception number 3. Banks only make money from fees. Fees matter, but lending and interest are usually the biggest source. So why does any of this matter? Understanding how banks make money helps explain why interest rates change, why banks care about credit scores, and why borrowing costs what it does. Let's do a quick recap. Banks make money mainly by paying low interest on deposits, lending that money at higher interest rates, charging fees, and offering financial services. Their business depends on trust, risk management, and regulation. Once you see banks as intermediaries between savers and borrowers, the whole system becomes much easier to understand. If this video helped make the topic clearer, let us know in the comments. And if you enjoy simple, easy to follow explanations, subscribe and turn on notifications.